First of all, you called it. What is your take on this Palantir news?
Obviously, it's not a surprise to me. The company's been close to cash flow break even. They've got a lot of cash on the balance sheet. So it's a company that can afford to be listed without raising money. Furthermore, as a tech stock, doing a traditional IPO put it in danger of leaving a lot of money on the table.
That said, it's a company that is losing money, which is not unheard of for a tech company going public. How enthusiastic do you think investors are going to be about this company, which has historically been incredibly secretive?
Well, the secretiveness doesn't bother me much. There are other companies that have military business where they don't go into a great deal of detail about the exact technology they use. And Palantir's got a lot of commercial business as well. They've got great technology. The fact that they're not profitable 16 years after being founded is a bit worrisome, however. The cash flow situation is better than their profitability for two reasons. One reason is a lot of their contracts, the customers are paying up front, and that certainly helps their finances. But also, they've been giving a lot of stock-based compensation, and that results in less cash flow. But on the other hand, shareholders are constantly being diluted as the stock-based compensation gets cashed in by employees.
Now, what do you make of Palantir choosing a direct listing when another huge company, Airbnb, we had reported they were considering a direct listing, but ultimately they're going the IPO route? What are the benefits and the drawbacks of a direct listing versus a traditional IPO?
Well, I think with Airbnb, they're probably pursuing a triple track strategy, possibly a merger with a SPAC, possibly doing a direct listing, very possibly doing an IPO. But by having the possibility of doing a merger with a SPAC or a direct listing, that gives them a little bit better bargaining position with underwriters for a traditional IPO. For companies like Palantir and Airbnb that are big, successful, albeit not especially profitable companies, they're going to get a lot of investor attention, and they can afford to do a direct listing because they don't need to worry about analyst coverage. With a company doing a direct listing, they're not paying as much to underwriters, and not as many underwriters are going to have their analysts cover the company. But with a traditional IPO, there's a danger of being underpriced by a lot. The average tech IPO this year has had a first-day return of 71%, the highest since the internet bubble 20 years ago. And that's leaving a lot of money on the table. And I think that's one of the reasons why Palantir, Asana, other companies are planning on doing direct listings.
What do you make of evaluations at this time, especially given that a lot of these companies have suffered because of COVID? Airbnb specifically, Palantir is a bit more of a black box.
Yeah, since Palantir is mainly business to business, I don't think they've especially been affected by COVID. Airbnb obviously has, but that Palantir, even though it's been around for 16 years, is rapidly growing. It looks like they're going to be hitting $1 billion of revenue this year. And they've got upside potential. But if we're talking about a $20 billion valuation, we've got to have at least $1 billion of profits per year in the foreseeable future. And that might be a bit of a stretch for Palantir because unlike some other tech companies, they don't have as much scalability. They've got relatively high marginal costs for incremental customers, as they tailor their software for that customer. And I think that's one of the reasons that I would have a concern about the valuation. It's a great company, but at too high a price, it doesn't mean it's going to be a great investment.
Palantir, of course, perhaps best known for its billionaire chair, Peter Thiel, who also co-founded the company that does data aggregation and analysis for many customers, including customers, the U.S. government, the Defense Department, the Department of Homeland Security. That said, you mentioned Asana. We also know Snowflake, Unity, DoorDash planning to go out of the gate in the fourth quarter. Which ones are you tracking and could potentially bring us some surprises?
Well, Airbnb is going to get the most attention because, millions and millions of consumers have used it, whereas some of these other companies like Palantir, Snowflake are not exactly household names. Obviously, when you're in the B2B business, you don't have that same brand name recognition among the general public. But among investors, these companies are growing. Snowflake is younger. It's got some substantial losses, whereas with Palantir, their losses are not growing faster than revenue. And so Palantir is a safer bet. Airbnb owns its space. Companies like Snowflake that are likely to be going public at very high price to sales ratios are setting themselves up for disappointment if they don't deliver on those very optimistic growth expectations.